traders, this is Gary Wagner with Wagner Financial Group, and this is your daily market update for Forex and COMEX Gold. It is currently Friday, the 20th day of August, and this is the weekend review. Gold is trading lower, substantially lower actually when we take a look at the lows. In the Forex this morning, 1227.3234. It is active and it is currently trading. The COMEX Gold bases the December contract at 1229. Interesting activity in the market. As you know, we have been looking for a potential conclusion to this B wave. We have a couple of interesting patterns that have been forming in both Forex and COMEX Gold, and we're going to spend a few moments today going over them. In both markets right now, we do have what I'm labeling as a three-river evening star variation, and that's both over here in the COMEX as well as in the Forex. Also, in the Forex, when we look at it, we do have what's called an engulfing bearish. An engulfing bearish is simply after an uptrend, you have a red candle, and that's followed by a black candle, which totally engulfs the entire body of the prior black candle. The interesting thing is we have been looking for a potential top to this B wave. We also talked about the fact that in terms of straight Fibonacci numbers, we were looking for in terms of an area right around anywhere between 1237 and 1240. Well, traders, we got that today. I think that this high that we're seeing up here, which is right around 1237, is going to be the high. My recommendation is going to be to enter short positions within the market today. And in terms of stops, we'll talk about that in a little bit. But I do believe that we are going to be entering that C wave down. One of the things that I find interesting, traders, is that when we take a look at these last waves, the top of wave 3, that was a beautiful $161. We did very well there. And wave number 5, if you take a look at the patterns that formed to signal the top, they were in fact here in engulfing bearish, and on wave 5 in engulfing bearish. Now, there are occasions where you might get them in between. You can see them in some other points. So we have to match that not only with the fact that we have that pattern, but also with the fact of looking at our Fibonacci retracement, because that's going to tell us if we're in an area where these particular patterns, if found, warrant our attention. And they absolutely do here. For those who have been following me for months and months, you know that we're very cautious when it comes to looking at these tops and bottoms. But by using this triple filtering system, Elliott wave, candlesticks, and Fibonacci together, when all three kind of come in harmony or come in unison, I feel very comfortable. And at this point, I feel very comfortable that we should be looking at a retracement of this B wave, and I'm looking at that as our final correction within this bullish trend. In other words, I'm looking at this as a corrective phase within a long bullish trend. You know, fundamentally, I am a bull in this market. I believe that this market's headed to 1300, but as I've said repeatedly through this wave here, we need to weather one more correction, one more corrective wave, and then I think we're off and running back into our 5 impulse waves, 3 of which are going to be solid impulse waves to the upside, 2 of which are going to be corrective waves. Just to give you an idea of how often we have found this particular pattern, the engulfing bearish within Forex Gold on the top of waves, I wanted to take this back, in fact, a little bit further just to kind of indicate what we're looking at. Of course, this is that record top that we hit in 2009. This is when, in December, when we hit 1221, our contract high. When the market, this was a dark cloud cover. When the market came down, you had some engulfing bearishes here, but also at the top of this B wave, an engulfing bearish. At the top of this wave number 1, in engulfing bearish. Wave 3, in engulfing bearish. and wave 5 an engulfing bearish. So, will history repeat itself? I can tell you this, the probability that an engulfing bearish at the top of a Fibonacci retracement area, meaning we're now at that 76% retracement of our A-line, and the fact that we have seen this pattern before in the market, I think bodes very, very well for the fact that we should be seeing a retracement. We're going to talk about where I think that retracement's going this next week, in the week to come, but we need to position ourselves on the short side and look to profit from this potential correction. Now, in terms of straight trading strategies, for those of you who are accumulating physical gold, whether it be through either EFTs or actual bullion or Krugerrands, Maple Leafs, I believe that you need to be adding to those positions if you're on an accumulation program during these dips. So, for those who are in the physical market, this is a time when you simply do not want to buy, hold the positions that you have, and when we signal a bottom to this retracement, that's when you want to add to that position. For those of you who are trading this market, whether it be in the COMEX or the Forex, this is where we want to initiate short positions. In terms of stops, the only things that make absolute sense, obviously, is to put those stops above the highs of this. In this case, it's a shooting star, and this happened, of course, in terms of the date itself, right in here, which is 8/19. The high that day was 837.20, and if you recall, for those of you who followed the I&O blog, I was looking at an absolute top at around 837. I didn't expect to hit it on the nose, but I did think that within that area, I thought we had a good opportunity. So in terms of stop, you're going to look at 1240. That's 1240 on a protective stop. For very, very conservative traders, typically on one of these, what we call engulfing bearishes, you want to wait for what's called confirmation. Confirmation would be on Sunday and Monday's trading, where you would get a black candle with a lower low and a lower high. This would be your confirming candle here. For aggressive traders, because of the fact that we are pegged at our Fibonacci area, we do believe that this B wave is concluding. I believe it is safe to enter the water. We still have an hour or 2 hours, depending on when this actually goes live and gets published, to actually initiate a position, and you can enter the market from the short side. Again, on the Forex, 1240 on a protective stop. In terms of what you're looking at in the COMEX, of course, that's going to be a little bit different. Let me pull that up. And again, in terms of the COMEX, the high that we got is right here again on the 19th, and basis December, it was 1239.40. You're going to want to place your stop at 1243, 1243 on a protective stop in the COMEX. Traders, I know this is going to show my age, as well as the fact that I used to watch way too much TV, but there used to be a TV show, and the quote on that was, "I love it when a plan comes together." It's kind of how I feel today. The fact that we're using Elliott Wave and Fibonacci, but we couple it with candlesticks so that we're looking for particular patterns, like we've seen here, to signal the end and beginnings of these wave counts, has worked out very well for us. It's been a great week. We will talk to you on Sunday for the beginning to see what happens next week. This has been Gary Wagner with Wagner Financial Group, wishing you, as always, good trading. We'll talk to you on Sunday. Bye-bye.